Welcome to Global Science, everyone. Joining us today from Los Angeles is Phyllis Lee, a talented and dynamic private equity investor and former New York investment banker. Phyllis, welcome to Global Science.
Thank you so much for having me today.
Thank you. Now, Phyllis, what effects did COVID-19 have on the M&A market?
At the beginning of COVID, M&A was difficult. Deal volumes fell by more than 30% in the first half of 2020 on a year-over-year basis. Many companies saw their revenues evaporate and cash flows were uncertain, which made it very difficult to perform valuation and engage with investors. However, it was a busy time for distressed M&A and restructuring as companies engaged in discussions with their lenders around the terms of their debt. Eventually, companies adjusted to COVID and gained visibility on their business, which is when we start to see M&A activity pick up in the second half of 2020. The busiest sector was technology, which saw the highest growth in deal volume and deal values in the second half of 2020.
Now, Phyllis, can you tell our viewers about the recent trends in the M&A market?
So looking ahead, I think 2021 will continue to be a very busy market for M&A. We are in a low interest rate environment with a lot of capital to deploy, so that is expected to keep the cost of borrowing down. As businesses emerge from COVID-19, I think we can expect a rebound in M&A from sectors that were not as active in 2020, so such as industrials, consumer discretionary, and natural resources. I think SPAC activity will continue to have a big presence in 2021. As companies still view them as alternatives to traditional IPOs or private sale transactions.
Now, Nvidia's potential acquisition of ARM is drawing worldwide attention. What is your take on this possible acquisition?
I think it is an interesting transaction. I think it would further strengthen Nvidia's position as a global leader in artificial intelligence. I think it could accelerate the advancement of computing to edge IoT globally. However, I think ARM is big enough that they don't need to be acquired to reach scale. I think the deal also has a very high chance of being blocked by regulators, given that ARM's semiconductors are used in over 95% of devices worldwide.
A recent article claims that over the past 25 years, the top 3 global companies in each industry had engaged in M&A activity to acquire competitors or outstanding startups. There are concerns that this type of oligopoly, although improving corporate profitability, has hindered technological innovation, leading to a reduction of economic and industrial dynamism. What is your view?
So I think the benefits of industry consolidation outweigh the risks. M&A is an effective avenue for companies looking to achieve scale and growth. And there is also a lot of startup activity and access to private capital. So I don't think M&A limits innovation. And while many startups have great ideas and products, sometimes they need an edge to get to commercialization or scale, which is something that M&A with a more established strategic can help accomplish. If the deal is executed successfully, both the acquirer and target can benefit from the synergies of the transaction.
At the beginning of the year, there was a SPAC frenzy, but it seems to be cooling down now. What is your view on SPAC investments?
So SPACs are a unique asset class that provides traditionally public investors the ability to participate and invest in high-growth companies. However, these investments are typically higher risk than more established companies that are able to go down the traditional IPO or direct listing route. Furthermore, there has been a record number of SPAC IPOs in the last 12 months, which has made it more difficult for SPACs to find a strong target to partner with. So all in all, I think SPACs are an interesting new asset class that can provide public investors with access to different types of companies, but the caveat is that they are still risky investments.
Now, Phyllis, how has COVID-19 affected LBO portfolio companies?
So when COVID hit, the initial focus was on defense and liquidity. Managers went about this by negotiating amendments with lenders, making corporate decisions to preserve cash through payment plans and through furloughs. Managers felt this impact more strongly in the gaming, lodging, and hospitality sectors, which were forced to close down and cease business during the pandemic. However, COVID was also a boon for healthcare and technology companies, which were suddenly seeing tailwinds through increased investment and demand for healthcare and the sudden need for the world to go digital.
Now, Phyllis, finally, can you recommend stocks to our investors?
So for U.S. stocks, I would like to recommend 3 growth stocks that are good long-term investments. First, I would like to recommend Lemonade, which is taking a disruptive approach to insurance. So traditionally, insurers have used agents to interact with customers, price policies, and process claims, but Lemonade makes these processes more enjoyable and efficient with the help of big data and artificial intelligence. I would also like to recommend Redfin. So it provides brokerage services to home buyers and sellers, and rather than treating agents as independent contractors like traditional brokerages, Redfin treats them as employees and pays them a salary with benefits. So as a result, sellers pay significantly less in commission fees than with Redfin. My last U.S. stock recommendation is The Trade Desk, which provides an AI-powered platform that helps marketers design, manage, and optimize digital ad campaigns. So that includes ad formats like display, video, social media, and mobile app delivered across various technological devices like computers, smartphones, and connected TVs. For Korean stocks, I would like to recommend Samsung SDI. And with the continuing US and China tensions, I think Korean battery makers will be able to sell more batteries. So finally, I would like to recommend Hana Financial, Shinhan Financial, KB Financial, and Uri Financial. I think that they will benefit in the rising interest rate environment since they will be able to benefit from the net interest margin expansion.
Phyllis Lee, dynamic, feisty, smart LBO private equity specialist. Thank you so much for being with us today.
감사합니다.
Thank you. Phyllis recommends a cornucopia of stocks today. For her U.S. stock recommendations are Lemonade, Redfin, The Trade Desk, and her Korean stock recommendations are Samsung SDI, Hana Financial, Shinhan Financial, KB Financial, and Uri Financial. Thank you so much for being with us today and making this happen. Until we meet next week, please be safe and healthy.